Housing market trends, both national and local to Wichita, is what we're going to be talking about today. Before we do all that, I got to do all my usual like, comment, subscribe, share stuff. Check out my other videos. All that is good things that you got to do when you're kind of a real estate YouTube influencer, whatever. Not a super influencer, but just here to provide value. But please like, comment, subscribe, share. That's how this really helps get the channel out there and promoting the real data of the situation and the facts of what's going on with the little guy that's been boots on the ground, talking to people, working with people, but also giving you the facts, not just what the headlines are looking at and that kind of thing. But I'm going to go ahead and get right into it, share the screens on the two reports I just recently had to help you make sense of all this and hopefully get this done in 10 minutes. I'll do my best, but no promises because there's a lot to go over. So there's two reports we look at: national reports from Keeping Current Matters that compiles a lot of resources, and the local South Central Kansas MLS, which is the region that we operate in, to help you make sense of all this stuff of what's really going on in our market, not the headlines. So the first thing we're going to look at is mortgage rates. And typically how mortgage rates work is they've moved in unison with the 10-year treasury yield. And what there goes on here is there's what's called a spread on everything. And so there's a prime interest rate that the Federal Reserve sets and deals with things to give you an idea of what the spread is that financial institutions and investors are making money off the money, essentially, is where it's at. And the only times the spread is approached or exceeded 300 basis points were during periods of high inflation or economic volatility, like seen in the early 1990s or the great financial crisis of 08 and 09. To give you an idea of where we're at 2.78. So in other words, 278 basis points. The average from 2020 to 23 was 212 on everything. Before that, previously from 89 to 2019, the average has been 1.66. So in other words, we've had it good for a long time, and the spread has not been that high. And that's partially why interest rates are so high and what's causing to assume these things. It's reasonable to assume the spread, therefore mortgage rates will retreat in the second half of the year if the Fed takes its foot off the monetary tightening pedal. However, it's unlikely that we'll return to the 170 basis points, as some risks are here to stay. So why are mortgage rates so dang high on everything? So if you look at the 10-year treasury yield, which is where the money's coming from, it's at 3.65 across the board. But what the difference is the lenders and the institutions and everyone else is making their spread off the difference of what they get the money for and what they're selling it to you for on everything. So if the mortgage rate was at the historical average of the spread of 1.72, mortgage rates would be at 5.37. Right now, with where they're at, actual rate on Friday, June 2nd, 6.85, the spread is 3.2%. If the mortgage rates get down to 6, like they should be, and where they need to go to, the spread is still 2.25, 225 basis points on everything. And so what we're seeing here is that the normal spread has been 1.72, but a lot of these lenders, financial institutions are needing to make up their costs. Like you're seeing a lot of lenders, a lot of financial people go out of business because they just simply weren't making any money. They cut the cost so low and people kind of lost their stuff, is that they were cutting it too thin on all this. So they kind of got to recoup some costs, get healthy, make profit again. But at the same point, though, they're pretty aggressive in what they're making off of the money that they're given on everything. So that gives you an idea of why interest rates are so high and why they're at where they're at. Depending on the lender and the financial institution you work with, you can get them closer down to here. Just depends on how much of a spread are they willing to make and how much are they willing to work with you to get a home and get a good interest rate that works for you. So that gives you an idea of why interest rates are so high, why things are at where they're at. Hopefully that sheds some more insight onto how this whole system works on everything. One thing to take into account, it is National Home Ownership Month on everything, and there's some key things to look at when it comes to owning a home. And I'm going to really paint the sentiment of it all as far as financial benefits, building wealth, building equity, long-term savings, basically a forced savings plan. You got to pay to live somewhere anyway, rent or your house. You might as well go into your own house where you can enjoy it, live in it, have control over it, that kind of thing. Strong credit history, not to mention keep your monthly payment the same instead of rents keep going up and up and up on everything. When the cost of everything goes up, your house is a hedge against inflation on everything. So also, there's all the non-financial benefits, social benefits like civic participation, financial education, health benefits, privacy, property improvements, home office, like what I'm working out of now. Obviously have friends over, have family over, do the things you want to do in your home that you can't always do in like a rental or somewhere else like that. And then, of course, there's the tax benefits, mortgage interest deduction, property tax, imputed rent, profit from home sales, yada, yada. Home ownership, still the #1 feature of the American dream. People really want to own a home. It's one of their highest desires and biggest milestones in their life. And I can tell you, like personally, from owning a home for a while now, that there is something about owning your own place and just relaxing in the backyard or your kitchen or the living room or whatever, that there's a piece to that beyond money that is just personally fulfilling, to own your own place and own a piece of the country that you live in. People still believe it's the way to build intergenerational wealth. It's the American dream. It's a smart financial decision, and even considering buying, investment properties on everything. Been the best long-term investments. Real estate's pretty undefeated throughout the years compared to gold, stocks, savings accounts, bonds. Not saying don't invest in those things, but real estate, your personal home, should be one of your number one indicators for everything. But there's always a but. Consumer confidence in home prices weakened towards the end of 22. This is the percentage of Americans who think prices will go down over the next 12 months. I'm not quite sure what they're basing that off of, other than hearsay, rumor, popular opinion, misleading headlines, and also just the the trauma and scarring from 08, 09. Even if we didn't go through that personally, like I'm a millennial, I'm 35. I honestly don't remember a lot of that, but my parents went through a lot of it. All of that is baked into our culture now to be financially aware and savvy, which honestly in some ways is a good thing, but I really don't think it's a good thing to be negative, to project and impose these home price declines on what's going to happen. Because if we all start believing that, guess what's going to happen? It's going to go down. So if you think about something negative, you're going to have something negative happen. So seeing that this is the poll is kind of concerning, that people are looking for, hoping for, trending for a decline, when in all reality, you don't want a decline. If the decline happens, a lot of people lose a lot of money on everything. And so that's where consumer confidence, home prices weakening again in April. And part of that is just a misunderstanding of how home prices work. And a big piece of that is this fact right here: median home price is meaningless. Most people don't understand the statistics and studying the market, and there's a lot of misleading headlines. They get swayed and influenced in certain ways that aren't helpful for them or the economy. And what you got to understand, which I'll show you on a national level and a local level, how this works and how crazy it is when you study the numbers and the data and the statistics. Median prices are distorted by the mix and repeat sales, but there's other indexes that are better for measuring prices. But median prices are very misleading, because all the median is the middle, is what that is. That's not necessarily the average or a good indication of what home prices are doing on everything. So as you've seen here, there's a lot of different ways we could teach you about median sale price, means the middle price of the home. So if homes that half of the homes sold for a higher price and half sold for less, it's not very useful for measuring if your home appreciated or not, because it's a composition of the homes that have sold. That's all. It's just telling you what is selling on everything. So understanding median sales price, here's a simple way to explain median value. You have 3 coins in your pocket, line them up in ascending value, lowest to highest. If you have 1 nickel and 2 dimes in your pocket, median value of the coins in your pocket is 10 cents. If you have 2 nickels, 1 dime in your pocket, median value of coins in your pocket is now 5 cents. Both cases, a nickel is still worth 5 cents and a dime is still worth 10 cents. The value of each coin didn't change. But if you look at the median, you are going to just, wash this across the board. That isn't really a true depiction of value and how things really operate and work. In today's housing market, we're selling more of the less expensive homes, thus driving down the median price. It doesn't accurately reflect the value of each house. So, and what I'm going to show you this on a local level in Wichita too. It's very eye-opening when you study the data and the stats to really know what's going on here, not just the headlines, the rumors, or your conspiracy theory YouTube rabbit hole friend that's telling you how the market's going to crash and everything's going to go crazy. That's been going on for the last 21 years and it hasn't happened on everything. Even with 08, like it dipped, but it didn't crash. Like there was a big financial correction there, but it didn't like crash. A crash is like you have the whole thing goes away. So let's look at an accurate look at home price movement. What you're seeing though is a stabilization, and what we're seeing previously was called the unicorn years on everything. But all of these different institutions are calling for a stabilization of everything, where we did see some home price decline in the second half of last year, but now we're starting to see it stabilize again on everything. And what we're really starting to study and see, so that you understand this well, is what we're calling the unicorn years of 11% appreciation in 2020 and 18% in 2021. And we're back to normal appreciation at 5% in 2022. Obviously, 2023 isn't over yet. We can't tell you exactly what all the stats for the year are because it's not done yet. But if you compare this, like 2022 to the previous 2 unicorn years that were anomalies, everything's going to look like it's going down, going down, going down. It's stabilizing. It's not going down. And I've been saying this for the last 2 to 3 years too on everything. But this gives you a better idea of what's really going on and what happened and how good we had it. And there's a lot of good financial ramifications from this now because of this 29% appreciation. You got to realize people have 30% more wealth in their house, 30% more equity in their house. They have options. They can do things with all that equity in their house. It's just they're unsure and they need a realtor. They need an agent. They need a solution provider that isn't just an order processor and a contract writer and check off the box type of person. You got to come up with customized solutions to tap into all this equity and do things, make things move. So in a lot of ways, a good skilled agent who can take complex situations, come up with simple solutions is valued more than ever as an agent. So what agents do is a lot different. I'll give you at that, but their value is still there. If you're the type that got in during these times, just trying to take advantage of the market, you're starting to get out of the industry now because you realize it's hard, it's tough. Like it's not just easy money like people think it is, but it's still a worthwhile profession, and you're helping a lot of people to make solutions happen within this economy with all this equity they have now, especially the older generation that needs help with technology, the pace of things, speed. They need to move on in the next phase of life, but it's scary for them because it's so fast. They're not sure who they can trust. It's all a brand new world to them and everything. So those are honestly some of the people that need help the most, is the ones that don't do technology well, have a lot of equity in their house, need to move on to the next phase of their life. And we need to help them as agents make that transition over the next 10 years into all that. This will give you some more stats on pending listings in the pre-unicorn years. Where we're at now, we're back to a pretty stable market like we were before the pandemic and everything went on there. Same thing with showing traffic on everything. You know, it's such an unusual situation. It's hard to make a comparison to those years because it's so unusual, you know, with everything that went on. Same thing with median days on market. I'm going to really show you the difference of median and average days on market when we get into the local stats on everything. So honestly, when we as agents talk to homeowners, it makes a difference. You know, helping people to understand the reality of the situation, not the headlines, their friends, everything else. Obviously, you're an agent. Here's a 90-day plan for you to assess all this and really be there for your people. So that's all the national trends we're looking at. So now let's look at the local trends on everything. So take all those national trends. Now we're going to apply them locally and see how that affects you personally in the Wichita market. Obviously, if you want something more succinct, direct on your house specifically, I'll boil it down to the neighborhood, into your house and your personal situation. This is on a very large scale from a national level to a local level to where then I can get it down to a neighborhood level, your house level, and your personal level on everything. Obviously, each one of those is custom. So feel free to reach out to me, message me, and we can evaluate that for you if you've been watching and listening for this whole time. But if you look at this, some of the quick stats are home sales, South Central Kansas are down 11.8%, meaning the number of sales is down, not the price is down on everything. So 914 houses still sold, down from 1,036 in 2022. So one other thing to point out is we have an average price of $231,000 in Wichita. We used to be like $160,000, $180,000 average market. Now we're at $231,000. That's a big shock for a lot of people on everything. We did see a 1.1% decrease from May of last year on everything. So if there has been a decrease, it's like a 1 or 2% on everything. But again, this is such a across the board situation. Each house, each location, each situation is different for all this. New construction, though, is up from 82 units the prior year, increase of 36%. The average sale price of new homes was $394,000, up 2.2% for the same period last year. So that's existing homes too. So you got to kind of take some of those stats into account on everything. We got about a 1.3 month supply, but what's going to be really cool is I'll show you in a sec, because I'm going to break this down by price point and you'll see the difference in price points of the market here locally. So let's go to the entire MLS closed listings. You know, we kind of were down in April at 724, but then we bounced back up to 914 sales. So we're still pretty healthy, still pretty strong, still following this bell curve of usual home prices and home sales of everything. We had some weird little blip here in April on everything, but now we're back to it. But obviously we're lower than 2021 and 2022, which were, again, unicorn years. It's kind of hard to make a comparison to that when that was such an unusual environment and economy and situation, but we're still healthy. We're still strong. It's just a different environment on everything. But this is probably the most fascinating graph statistic to study out here. If you look at anything below 100,000, which we affectionately call the war zone, most of them do not sell for asking price. They sell for below asking price. This right here is price as percentage of list, average and median. Most houses are selling below the asking price of what you're asking there. And also you look at like how little of the market it is. It's about 11% of the market. 100 to 200,000. This is what I call the starter range, low end, whatever you want to call that, however you want to classify it. If you look at how much of the market is, looks like it's about 25% of the market on everything. And most of these houses are selling 100.3%, 101, 102, 101% of list price to sale price on everything. And you can look at how many of these sell and what they go for. Now, when you get into, and that's, low end, starter range, that kind of thing. Now, when you get to 200 to 400, this is more like mid range and high end. What you'll notice here is those houses are still selling, especially the 200 to 250, selling for 103% of list price, the highest above asking price of all of them on average. This is probably the most desired piece of it. There's been 120 units sold there. Second highest in the whole market. 300 to 400,000 obviously is $100,000 range as opposed to a $50,000 range, has 150 units there. This is by far the biggest piece of the market. It's from 200 to 400,000 in our market, and a good amount of those going over asking price. But once you start get to the 250 to 400, you look at how much more supply we have at 1.5 million, one supply and 1.9. It starts to get into more of a balanced market when we get up to this level. And then when you get into what I call the high end, which is about 400 to 550,000, which it gets really large ranges here to look at. This would be high end, and then really 500,000 plus is like the elite luxury range. And it's such a large range from 500 to 750. Like, that's such a wide category to put that in. Like, you could still keep breaking it down to see where things are at. That's only like 10% of the market. And then 750 and up, you see how little houses sell in our market at that price range and what they sell for and how they work. So as you start to get to this like 350 and above mark, you realize it starts to become more of a buyer's market at that price point, just because of studying the market and how we work in Wichita area with the local numbers here, compared to you go to California and like the entry point is 500,000, or Florida, somewhere like that. You come to Wichita, $500,000 house is like a high-end mansion out here. So it's very important that you study your price point, your market, your house, of what you're trying to do based on these local market statistics, not just where you think or feel or hear from your popular opinion. We go off the data. Again, this is on a market-wide statistic. I can take this down to your neighborhood, to your city, to your personal situation to really help you make sense of real estate and the mystery of all this. But hopefully all this is enlightening of what's really going on in the market with the data and the stats, not just what you're hearing from your friends and headlines and all that we're combating. This also gives you an idea of like average closed listings price is $249, median price is $220. That's why I said we're about a $230,000 market now with everything. This is probably the most misleading number or statistic here that most people are confused by. Average days on market for a closed listing is 21. Median days on market is 4. Which one do you believe? Average days on market is honestly a better way to gauge how fast your home will sell. Because if you tell people or houses are selling in 4 days and they don't sell in 4 days, they freak out. It's because you're telling them its median days on market is 4 when you should be telling them the average days on market is 21. This is a more accurate depiction of how fast your house will sell or not. This median days on market is misleading, and you're hyping people and selling people and pushing them when they need to be told the right facts and the right data, which is these average days on market, not median days on market, because it's very much different than what you're seeing here. We'll get out of here. It's very different when you look at these two between average and medium. And this is one that probably bothers me the most when it comes to sellers, agents, other people thinking you can just throw your house on the market, it's going to sell right away. It's not the case. You got to be prepared now to service your listings longer, for them to not sell right away in a weekend or a day or two, that they may take 21 days, 3 weeks to sell. It might take you a month, 2 months, 3 months. And again, it depends on your price point of what you're selling to and your location and the condition of the home and your situation and what's going on there. Like there's a lot to assess here, and not just thinking like, oh, I'll just throw my house on the market, it'll sell. It's not true. It will sell. The value's still there. It'll just take longer to get done is all that comes with that. So gives you an idea of how many active listings. We have less inventory, less houses to sell on everything. That's one of our biggest hurdles we got to overcome right now. Active listings by month gives you an idea of how many we have and what's going on there and how low it was back then in 2022. So a lot of other stats we could go into here, but I think I've taken enough of your time already. I appreciate you watching as always, and liking, comment, subscribing, sharing this with people. If I can get more detailed and involved with you on your personal situation and your neighborhood and your house and that kind of thing, I'd love to be a resource. Hopefully this helps you really understand how things actually work, not just the hearsay, popular opinion, that kind of thing. I'm going to shut up and leave it from there. See ya.